Hey everybody, it's Pete Carmasino here at Chaikin Analytics. This is the halftime show, first one of 2024. Just been working on some things, a lot going on, obviously here in the markets and just around the world, of course. And so what? New year brings new noise to the market. And I've got a new kind of, twist on things. And with the new noise, it's really more uncertainty, right? We're not exactly sure, really. Rates have had a path, obviously, to the downside because the bonds have rallied right off of our target, my target that I had for TLT anyway, for quite some time. And now I'm going to just look at that chart today, kind of see where it's going. I've got multiple channels built. It's a little confusing, but I'll walk through it a little bit. But there's just a lot going on. We're going to look at the dollar. We're going to look at obviously the major indexes. We're going to look at the bullish percent. I got to do a deep dive and kind of look at a lot of these indices right now to see what's going on. Now, each and every week, we kind of go over some different things. We look at sort of the market mechanics. A lot of things happened in the past week. The first week was a big sell-off, and the next day here, a couple of days, we had a nice rally, but now we're down a little bit today. But I think the market's just, sort of treading water here until this inflation news, Thursday, Friday, PPI, CPI coming out. So again, we're just going to have to wait again and see what's happening. But look, the trends are the trends. We're going to look at that bullish percent. I think that had some interesting points, but the quote really of 2024 for me is that uncertainty needs attention. And if uncertainty gets attention, then it makes you double guess or, second guess or triple think what you're doing. And you want to try to avoid that at all costs. However, the looming situation is always there that things could change. The idea is to be able to change when the facts change. And that's it. The uncertainty is always there. I don't care. Go back in any page of the market, 10 years, 20 years, 50 years ago. There was always something that was looming out there that could happen, it might happen, worry about oil prices, inflation. It just happens all the time. So let's not get too carried away with it. But let's dive into the market mechanics. And the other thing, you have the oil, WTI Crude, WTIC, is back in the White House buy zone that I kind of nicknamed that, over a year ago, probably by now, since they announced the buy zone between $67 and $72 per barrel of oil on WTI crude. That's kind of where it's sitting right now. It came all the way back there. Is it a put? I don't know. It could be. It could be the White House put on oil, but we'll look at that. And we'll also do a quick look at the sectors. All right. So we've got indexes, we've got the dollar, we've got rates. And lastly, can't believe I'm going to do this. First time here on the halftime show, I'm going to show a part of our system called the discovery engine. I'm going to pop in a name and I'm going to look at names that are similar in technicals. Now, I'm not a big fan of biotechs or anything of that nature. Pharmaceuticals I can handle, but there are other names that are coming up when I pop in this one pharmaceutical name, and it's kind of our search. We call it the discovery engine. And what it does is it kind of finds names that have similar attributes. Could be in the rating, could be in the technicals, a lot of things. But I'm going to look at the technical ratings today on a big pharma name that people are talking about out there on the headlines. All right, let's dive into the charts and see what's going on. All right, I'm going to start here with the bullish percent of the S&P 500 here on the ACP platform. Love the platform. Hope you guys are getting a lot of use out of it. To me, it's just, a lot of fun being able to draw things and annotate and add notes and stuff like that. So I get incredible use out of it. I hope you do too. All right. So these I drew a few times, right? I saw some divergence here on the sell-off, right? That was back around that October to November low in the market, right? Now, bullish percent basically just looks for, the number of buy signals on the S&P, inside that the 500 index, right? S&P 500 index. Now, what I saw here was sort of an RSI, 14, measurement of RSI, where it had divergence, meaning that this was showing a higher low and this was showing a lower low. Now, you typically want to follow one of these, but if in the narrative and the environment that the market was in, this was a bullish setup, obviously, because we were talking about rate cuts and things like that. And that's still on the table, obviously, but, inflation is still hanging around and not really going away. But besides all that, looking at what happened is we bounced and ran all the way up. Look what we did. We kind of topped out right around this 81 level, and it kind of sits there all the time. If I squeeze this chart back, it rarely gets above it. And when it does, it doesn't last very long. And so I like this signal because to me, there's two things going on. Obviously, the S&P has yet to hit a new high or print a new high, should I say. while the other indexes have. The second thing is that, without the Magnificent Seven or the big names or the heavily weighted names in the S&P 500 rallying, it isn't going to get there, right? I mean, so that's the unfortunate part. So you need the other 493 names or something, whatever the remainder is in the S&P 500. It doesn't always have 500 stocks, by the way. Sometimes more, sometimes less, but it's around 500. But anyway, the rest of the group has to participate as well. And so for that to happen, that would be an incredibly broad-based rally. Look, we got earnings coming out. Things can happen. So I think this is sort of overbought, cautiously optimistic. There's no doubt a PPI and CPI coming out is going to play a role in maybe some volatility and maybe some spikes one way or the other. But on the S&P right now, looks overbought. And when we look at the Nasdaq, I don't think we're going to see a different picture. But let's take a look real quick at the bullish percent on the Nasdaq. Now, this one got real high, right? Hit a new high, got up to 90. I don't think we haven't seen that since, when was this? March of 2022. And that was really during a sell-off, right? So this was sort of a rip-roaring rally. I remember that month of March in 2022, and we got all the way up to the 89, 90 level and just rolled over. Now, are we going to do that again? I don't think so. But you see a nice steady move higher on the RSI. It's obviously oversold here. But interestingly enough, the bullish percent itself is still recording a high level of above 70. And so it's kind of pulled in a little bit. Can it last up here for a while? Sure it can. I mean, there's no doubt about that. But again, 100 names, if only 7 of them are the ones rallying, and you got maybe some sector like semiconductors or some other tech weighted area of the Nasdaq 100, which is mostly tech, if you start to get a group rally in there, you might get another push higher. So bullish percent in both cases look a little overbought. Quick look at the S&P 500. I had this chart up several times about sort of the channel that the S&P was living inside of and moving higher. Now, I drew this as just sort of a guess, right? I mean, looking at the way the market was rallying, what a new high would look like, 48.20, or at least the previous high. And darn, did we get close on that before the year ended. But it rolled over in the first week. A lot of people are just kind of deferring taxes. There's a lot of reasons out there for selling in the first week or two. Could just be like some of these names are just incredibly profitable, and people want to take the profit and maybe roll into something different. Nothing wrong with that. But the market has to be able to handle that. Looks like it is, basically. But, we're kind of in a volatile several trading days right away. Now, nothing's really changed here. There's a lot of gaps here that we talked about. There's one off this low here, right? This gap was unfilled. It remains unfilled around 4,000. Again, nothing really saying that it's heading in that direction. It's inside the channel. Looks like it should move continue higher, but again, breaking this previous low, right, around that 4,700 or so, and rallying off it was very positive. Now, if we can continue that, that'd be great. Like to see new highs, but no guarantee. All right, I apologize right away for this busy chart, but it tells a story, doesn't it? You're talking about a long-dated chart here, 2021 all the way to 2024, right? Right now we're talking about a 3-year period. We know what happened, right? I'm just kind of looking back, and again, I call this looking at films, right? Reviewing the tape, going back and seeing what happened and trying to anticipate what could happen from here. Now, we were talking about rate increases, NDX, and markets sold off. You look at the correlation of the dollar to the secured overnight Federal Reserve, lending rate, the SOFR it's called, right? You try to find a correlation with the dollar. Now, when it started to get correlated, the correlation started to decrease in November. What did that mean? That meant the dollar was decreasing because we were looking for rate eases. And when rates go down, technology stocks do a little better. And look at the massive rally there, right? There's no hiding this. Now, it happened again, right? We saw the dollar rally. We saw the Nasdaq falter slightly. And here it is again. When that correlation started to weaken between the beginning and the end of October, what do we get? A big rally to a new high, okay? So I'm watching the dollar because it's related to rates. We're going to look at the TLT in just a minute. But all of these kind of play along together, right? When bonds are rallying, that means rates are coming down, and so is the dollar. When bonds are falling, that means rates are going up, and so is the dollar moving higher, Okay. The dollar becomes more attractive when our rates are higher, and so on and so forth. It's a vicious cycle, but if you can see what's happening on the chart, you can either gain from it or protect yourself from it. One of the two things can put you in a great, incredible position, should I say, of profitability no matter what you're doing. All right. So I drew this chart because it's very busy. I know that, but I wanted to show the correlation. I think it's important to pay attention to. All right. One of my favorite charts I created last year, I got to say. And when I say last year is really, I mean, in 2022, I've been looking at this chart now for a year now. It's pretty amazing, right? White House announces this in October of 2022. Now we're, not really 2 years, but like a year and change ago. Make the announcement 67 to 72. We kind of meander around there and then rocket higher, right? There's a put here. There's really no sellers, right? The SPR is pretty much, that's the Strategic Petroleum Reserve here in the U.S. was pretty much, I don't know, as low as it's been in, 40 years or whatever. Don't at me if I'm wrong on that, but, I don't know exactly, but it's low, right? It's at a low level. We're talking about replenishing it. Never did it. Missed the trade, moved higher to 95, and then rolled back. Let's hope they're getting an opportunity here to do this, but it's sitting right here. And look what's happening, right? It looks like it's basically acting as support. The minute it traded around this 69 level, it pushed right back up towards 75. But I, for one, think that this is sort of the White House put, right? You know how we had the Fed put in the markets? Well, we got the White House put here in oil. And let's just see. I don't foresee oil rolling any lower, especially with all the turmoil in the Middle East. You would think this would be pushing 100 by now. Thank God it's not, because that's holding inflation down. But with some buying opportunities down here, maybe that's an opportunity for us to replenish our stockpile. Here's the chart on TLT. Look, I know these charts are getting busier and busier, but I wanted to kind of visualize some of these, right? So I see these two upper areas, right? Upper and lower, I should say, right? The widest channels, right? And they're widening out. I'm not sure if this is sort of a different trend that's taking place, but markets are fractal in nature, right? So I can draw 6 more lines on here. I don't want to, but I could, right? I can draw a line, from here through that level, right? I can draw another line from this low all the way down, right? And I can even move one of these, kind of make it easier on the eye. I could take that, right, and draw that right here and kind of say, all right, I see sort of a trend materializing right there as well. What I'm trying to find here is sort of the idea of, are bonds really ahead of the Fed? It seems like they are, right? It seems that the bond market has done the work of the Fed by lowering rates already, right? But maybe it lowered rates because it really raised rates prematurely, right? With that bond sell-off right into, whatever this was the end of October, and then another Fed pause and so on and so forth. The narrative built and the momentum built, and all of a sudden it was like, you got to buy bonds, cover your shorts and go long. And here we are. People are locking in that 5% rate or so on some of these bonds, if not more, in some cases. I had a level of 520 on the yield of the 10-year. I was off a little bit, not by much, really, 20 basis points, but close enough for horseshoes and hand grenades, I guess. At the same time, we were talking about taking shorts off right around, October 10th. And then obviously the market continued to rally. And then that was really when the Fed paused and some other things happened. But my point is that it looks to me that this is going to be resistance right around this 100 level. It just looks that way. Now, it's above some of the channels. It could trade up to this level, which would be insanely profitable for anybody who's long bonds. A 20% move in bonds is just incredible. I don't know if that's going to happen. That would push rates pretty low, right? If you consider where rates were the last time bonds were at 120, it's kind of funny to think about. But there you are, somewhere around less than 2%. Just don't see that, right? I just don't see that. So you want to put everything on the table, kind of look at what's going on. Maybe we got resistance here and it rolls over. All right, we're back here on the Chaikin system, and I'm just looking at the S&P to start, and I'll look at the Qs, and then I'll go through what I said that I've never done before. I'm going to show the discovery engine here. I think it's pretty cool. So let's just see what's happening. Look at the reversal buy on this. Let me explain that here. sort of a trigger here on the S&P and on a lot of equity ETFs and equities in general. So when this particular, this is the 21-day moving average in the middle of these bands. When it closes below it and then moves higher the next day, it's kind of a reversal, right? We call it sort of a risk reversal or reversal buy, whatever you want to call it, meaning that the trend was lower and then abruptly reversed higher, being oversold with great money flow. I'll tell you, that's a pretty good setup. And so could it continue higher? Again, what I said earlier, look, we need more participation in a lot of the other remaining 490 some odd names that need to get sort of off the bench and in the game a little bit. But, stocks are moving, just not in tandem. And again, not the entire group all at once. A lot of people are looking at the equal weight. That's simple to pull up RSP. Again, you saw a great participation rate here from the low. Now, all stocks rallied. I mean, stocks have woke up. There's names out there that are up 100%, that haven't moved in 2 years. So everything kind of rallied on lower rates. It was very euphoric in nature. And the RSP is really at these levels that look toppy, right? That 155 to 160 level is kind of a toppy situation here. Now, the nice part is that this does show a lot of participation. But again, we can't rely on it until we see it in the actual index as well. But the equal weighted is a nice way to track it. Let's look at the Qs real quick. Same kind of setup here. Incredible money flow, oversold, incredible relative strength versus the SPY, and getting an interesting setup here as well. So pushing potentially to newer highs around that 390 to 400 level. We called that support on one of our other calls here internally. And I thought that was really interesting setup as well. All right, let's go to Discovery. So what I did was I typed in Pfizer, right? Some people are talking about it today. I don't know. I'm not a fan of a lot of the pharmaceutical companies. However, I have to look at the technicals, and when the technicals tell me what to do, I try to ignore and not have any of my internal biases lead me one way or the other. But what I did was I pulled in all of these names, right? So what am I looking for here? I'm looking for similar technical setups as Pfizer. Now, not all of them are in great shape. However, stock like AbbVie, large biotech, right? When I say I'm not a fan of biotech, this is a $285 billion market cap with a $55 billion, revenue stream. Okay, not considerably concerned about AbbVie, but I'm not buying a pharmaceutical with no revenues and $6 billion market cap. Just not my style. But some of these names like AXS, an insurance companies pulling up, Ciena, which is a communications equipment name. Again, just starting some changes, really struggling. There are some names like Gilead Sciences. This is a big biotech name that actually are starting to pop, forming some new highs. You can look at AstraZeneca, another pharmaceutical name, just about to turn. Here's an interesting insurance company as well. Do like insurance here. I have to say, decent dividends, nice looking power gauge with bullish ratings. That looks interesting. Here's Merck and Glaxo. Let's look at Merck. Merck, it looks to be an interesting chart here. It has a relative strength change. We did upgrade this to a bullish name. If I look at a 5-year and I zoom out, pretty much at its highs. I'm not exactly sure where Merck can go from here. Not too, excited about it. But if I look at a name like, Sunoco Products, the container and packaging name, I see a name. Let's see. What's that? A $5 billion market cap with almost $7 billion in revenues, low PE, decent dividend. This isn't a bad opportunity here. Relative strength is improving. It's not there yet, but you're seeing some changes above the long-term trend. Strong stock and a strong group. I think there's some nice looking opportunities here. So I never saw the Discovery Engine before. It's really cool. You pop in a symbol and you can find other names with similarities to the symbol that you popped in. So other stocks like Pfizer, short candidates, similar bull setups, and ones with similar technicals. Some of these look good. Some of them are still baking in the oven. All right, y'all, that's all we have here for the beginning of 2024. I'm Pete Carmasino here at Chaikin Analytics. I really appreciate you tuning in. It's been a great few years here on the Halftime Show using StockCharts TV. The production team is fantastic. I appreciate all the work they do behind the scenes, and I want to welcome you to 2024. Let's see how much we can profit again this year and follow the trends as they materialize. So tune in again, leave me some comments, We'll see you next time here on the Halftime Show.